Now, we have come here to learn about banking. When you want to learn about banking, you have to study as optional subject non-banking. Why? So this must be a question in your mind. Why are we going to learn about non-banks, NBFIs, non-banking financial intermediaries, when we are going to study about banking? Okay. First of all, we will look into this side. Financial intermediary. Whether we call banks or finance companies or by some other names, our job is to collect money from those who have and hand over it to those who don't have. And what are we doing? We are providing a middleman service, a third party service. And for that service, we charge something called interest. Remember, we financial intermediaries are not printing money. We are not manufacturing or creating money. We collect money from others and hand over the same to some others. And our area entirely is known as financial intermediation. So if you just read the slide, a financial intermediary is typically an institution that facilitates the channeling of funds between lenders and borrowers indirectly. That is, savers give funds to an intermediary institution, and that institution gives those funds to spenders. Okay. So that's our job, financial intermediation. Right. Now, basically, you can use the chat box and answer. I'll ask you some very simple questions. Suppose that you have 5 million rupees in your hand and your best friend need 5 million to buy a vehicle. Will you hand over your 5 million to your best friend to purchase a vehicle? And he will pay back in small amounts. Maybe he wishes to complete settling within 7 years. Will you hand over your hard-earned 5 million to your best friend? Say yes or no. I'm asking a very simple question. You have 5 million. Your friend needs 5 million. Will you hand over this hard-earned 5 million to your best friend and agree to settle within 7 years? Say yes or no. Very good. I need some other answers. Okay. Right. Okay. Thanks. Now, there is a bank, well-established bank with a good credit rating, and they offer you 8% FD rate for 7 years. Will you hand over your hard-earned 5 million to this bank? Say yes or no. Yeah. Okay. Right. Now, this is the problem. You are not handing your hard-earned money to your best friend, but you are ready to give that money to a third party known as a bank. Unknown third party known as a bank. Why? Tell me one simple sentence. Why do you hand over your money to the bank but not to your best friend? Tell me a single reason why you don't, right? Okay. Very good. I got the word. Trust. Trust. My dear, today you are living in a world where you don't trust your best friend, but an unknown bank. Okay, good. That's what I want to get out from you. Why do you trust this unknown third party called financial intermediary? It can be a bank, it can be a finance company, it can be a stockbroker. Yeah, it can be appearing in different name, but you are ready to trust him. Why? Why do you trust this third party? Again, tell me a reason. You don't trust your best friend because of their reputation. Okay, good. Others, tell me some other reason. Very good. That is the word I want. Regulated, authorized, monetary of CBSL. Very good. You trust this unknown person because you believe in regulation, because you believe in the regulatory process. Very good. Remember, financial intermediaries are highly regulated, and the regulator appears in different names. In most of the countries, that appears as central bank. In Sri Lanka, we call it central bank. Can anyone tell me how it is known, this regulator, the regulator of financial intermediary? Can anyone tell me how that is known in United States of America? In most of the countries, we call it central bank. But in America, what do you call it? Yeah. In Sri Lanka, the regulator of financial intermediaries are known as, basically the banks and finance companies are known as CBSL, Central Bank of Sri Lanka. Very good. Federal Reserves. Very good. So in US, they call it Federal Reserve. So there's a regulator. Why do you hand over your hard-earned money to this unknown third party? Is because you believe in the regulator. I'll give you a very simple example. What will happen when things are not regulated? You trust commercial banks, you trust finance companies because of the regulator. But these days, we all are facing unprecedented situation, that is COVID-19 spread. Initially in Sri Lanka, it is only the state did PCR tests, and slowly it was allowed for the private sector to do PCR. Now, in our institution, we used to do PCR tests from time to time, and we called a private hospital. They came and did antigen or PCR tests. Right. This private hospital, whenever we called them, they came to our premises. Mind you, they came in most of the time. I would say in almost all the times they came in rented cabs. And those technicians were very just like school leavers. I wondered about their experience as well. In one particular time, the PHI of the area said, right, now when the state sector, PHI and the team came, they came up in vehicles dedicated for this purpose, and there were well experienced nurses, and the team PHI was wearing uniforms. Almost everyone was in uniforms, and there were even office assistant who used to spray and sanitize the entire area before starting. They came up with laptop, and all the records were immediately entered. That was not seen in the private hospital which were doing our PCR tests so far. Okay, means what? Okay, then I came across lot of complaints about this private sector facilitating PCR and COVID related support services through hotels program. Charges were different from person to person. Means what? It's not regulated. So people have problems in areas where they are not regulated. But unlike other fields, banking sector, non-banking financial institutions are regulated, and as you perfectly said, you trust simply because of this regulation. Okay. Now this is the process. There are depositors, and they will hand over, like you said, your 5 million, you are ready to hand over to the financial intermediary. And there are borrowers who need money. So our job is charging interest and hand overing this money. Okay. Now again, I'm asking a question. 1 minute. Can you see the screen? Say yes or no in chat. Okay. Okay. Yeah. Can you see the screen now? Can you see the screen now? Okay, right. Thank you. Thank you. Okay. So this is what is happening. The act of connecting surplus units and deficit units, we call it financial intermediary. Central bank, or you call the statutory reserve bank, is regulating. That's what you said. We trust it. Savers hand over their hard-earned money to banks. Banks in return hand over that to borrowers. And the process continues. We recover and pay back to the depositors, and the process continues. Okay. Money can create only two problems. If I summarize everything, because of money, you will get only two problems. What are they? What are the two problems that you would face because of money? Type your answer in the chat box. Yes. Okay, now because of money, you get only two problems, right? What are these problems? Yeah, I have excess money. I don't know what to do with this. I have excess money. I don't know what to do. The other is, I don't have money and I know what to do when I have money. Okay. So these are the only two problems money creates in your mind. I have money and I don't know what to do. The other side, I don't have money, but I know what to do with this money. These are the only two problems money can create inside you. Right. Tell me the excess party. I have enough money, but I do not know what to do with this money. What are they going to do with their money? Think and tell me. In the chat box, you can type the excess. Very good. Where are they going to invest? Those who have excess money, those who say, I have enough money and I don't know what to do, their easy job, the lazy job in a bank, they come and hand over their money to the bank. Right. The other side, look at the other side. I don't have money, but I know what to do with money. Where are they? Okay, what is their solution? What is their solution? Okay, borrow from whom? Borrow from whom? The same thing. When you have excess money, exactly. When you have excess money, you go to bank and hand over. When you don't have money, you come to the bank and ask money. Right? So you have only two problems, and these two problems will be addressed by the banking system. Let's look at that. You have only two. You have only two problems created out of money: surplus or deficit. I have enough. I don't know what to do. The other, I don't have much, but I know what to do. So we call them surplus units and deficit units. If you are falling into the first category, surplus units, these are your options. As one of you said, I can invest where? Stocks. If not, bonds, notes, CDs. Okay. Pre-need plans, treasury bills, life insurance plans, bankers' acceptance. Okay. I don't have money. In the same manner, you have a list of products. So what are they? Housing loan, credit cards, leasing, hire purchasing, margin trading, factoring, all sorts of borrowings. And we are satisfying both parties by providing a middleman job and charging interest. Okay. Our job is linked to the entire economy. These days, you find another nice discussion going on about the intermediary job of fruit and vegetable sellers, basically vegetables. Vegetable price has skyrocketed. Rice per kilo is competing with US dollar. That's how I see it in Facebook and other social media. Okay. Tell me a reason why this vegetable price is going up. Tell me a reason why the vegetable price is going up in Sri Lanka. In the chat box. Very good. Okay. Something in addition to this. That's how everyone is looking at to this problem. There is supply side, supply is less, fertilizer issue is there, pesticide issue is there, and I've seen when you pick maybe 20 kilos of brinjals, the saleable condition is only for 1 kilogram. The rest you burn it out because of the pest. I've seen this kind of discussion going on. Production is less, supply is less, that's economics, supply side. Demand is high, that's economics. And everyone talks about that. Then everyone is finger pointing at the middleman. Who is that person? Those who collect vegetables from the farmer and sell it to the retail sector. That middleman charging unnecessarily higher amount for his third party business. Can someone tell me a problem these vegetable sellers are facing? I have never seen that issue is discussed. Most of these vegetable sellers, small scale, the third party, they don't have money to buy a stock. Right? From whom do they get money? Think about your town's vegetable seller. He is not having money to buy the stock. To whom they go and get money to buy this vegetable stock? Very good. That is the word. Informal lenders. Informal lenders. Okay. How do they get money? On daily interest basis. Right? Suppose your village or your town's vegetable seller want 500,000, 5 lakhs to buy vegetables. He is buying that amount. And the facility is taken from informal money lender. That is the correct term, informal money lender. How much he is charging? 10% per day. Means what? When he buy vegetables worth 500,000, he has to pay 50,000 to the money shark. Right? That's an issue which is not being discussed in most of the platforms on vegetable or fruit selling. Informal lenders in Sri Lanka are charging extremely high. Okay, tell me why your village vegetable seller has to depend on informal money lender. He has the practice of obtaining money on daily basis and paying 10% daily basis, and the cycle continues. Tell me why this village level seller has to depend on informal money lender. Okay, lack of money is one issue. Is it the real issue? Lack of money. Yeah, we all lack of money. We all face that. But we don't go to the money sharks. We go to banks. But why do they? Okay. Right. Okay. Right. So we are all finger pointing to the bank and say because of documents. Right. Right. Lack of knowledge of formal financial institutions. Very good. Okay. Speedily they can get money. Okay. From the money sharks, you can speedily get money. They don't want that much of document and so many good reasons. But out of all this, the most important thing is lack of knowledge. We call it lack of financial literacy. We say in Sri Lanka, the literate rate is very high, very good. Almost all the people can read and write. Good, fine. But lack of financial literacy. People don't understand different type of vehicles or instruments available in the financial market, money market. This is why they always do the same thing, go to the village level money shark and get money. But I would add one more important thing, which we lack in Sri Lanka: discipline. If you have financial discipline and planning, you will not go to the money shark. Instead, you will create your own reserves, pool of money. You will start slow and grow. Today, I'll leave you a name of a movie which is freely available in YouTube if you have some kind of access to data or whatever. I recommend you to watch that movie, The Founder. It's all about McDonald's, your favorite burger maker. Okay, McDonald's. What made them the giant in their business? You will understand how to get the maximum out of banking system and why you will fail when you don't have financial literacy. Okay, right. We'll get back to our main subject. Right. So people come to us because they don't have money. People come to us because they have money. Only two types of people come to us. And our job is helping both and charging interest. Now, what is NBFI sector? NBFI, non-banking financial intermediary sector, facilitate bank-related financial services. What are they? Investment, risk pooling, contractual savings, market brokering. Examples of these include insurance firms, pawnbrokers, cashier's check issuers, check cashing locations, payday lending, currency exchanges, and microloan organizations. Okay. We are also called shadow banking. Shadow. Have you heard something called shadow boxing, shadow cabinet? Okay. What is shadow cabinet? Shadow cabinet. In a democratic country, there is main party who is in power and there is main opposition party who is in opposition. And we believe the duty of the opposition is to capture power legally through elections and immediately remove and replace the existing government. Okay? And the government constitutes of cabinet ministers. They have different portfolios. For an example, think about very important portfolios. Finance minister, defense, maybe education. Just think about three. So the ruling party who is in power really control the government where there is a finance minister. In opposition, there must be an earmarked person to remove and replace the existing finance minister the moment they capture power through election democratic process. So whatever this existing cabinet minister of finance doing, the nominated shadow finance minister is evaluating. He come up with his proposal. If I face this situation, this is what I do. Okay. There was a very good discussion in YouTube that's done by prominent business tycoon, a prominent entrepreneur in Sri Lanka. And he says, in Sri Lanka, most of the people are really good at coming up with questions. But the issue is, what is your solution? Okay. So the shadow cabinet minister will come up with this type of solution to the problems we are facing. So right, our term is shadow. So you have shadow cabinet. Shadow boxing means, okay, you don't have a opponent, but you think there is opponent and practice yourself as if you are fighting with a real opponent. In the same manner, shadow banking. Our area is known as shadow banking, shadow of banks. That term is used by an economist known as Paul McCulley. He refers to all non-bank financial intermediaries that provide services similar to those of traditional commercial banks as shadow banks. Okay? But these shadow banks are not regulated to the extent banks are regulated. So this is how he says it. Over the past few decades, a network of diverse non-bank financial firms and markets, dubbed shadow banking system by economist Paul McCulley, had developed alongside the formal banking system. The shadow banking system includes non-bank lenders like mortgage companies and consumer finance. Right. We are not banks, but we are known as shadow banks. The term shadow banking has been described a large segment of financial intermediation that are outside the balance sheets of regulated commercial banks, conduct functions of banking without access to central bank or the Federal Reserves. The regulator, you trust the regulator. I said initially, PCR tests were not done by any private party. There were no quarantine centers by private parties. It was perfectly and purely handled by the state. But the state is often regulated. There is MOH, PHIs, they regulate. And all of a sudden, government found, okay, we cannot manage this ourselves. We will allow private sector. And the private sector was not monitored. Today, you have quarantine centers in the name of hotels plus hospitals. They charge different rates. Per PCR testing, they charge different amounts. Okay. When the problem is extremely high, when you find a lot of cases, then hotels start to charge unnecessarily extremely high amount, and they are not regulated. No one is looking at that. But that's not the way finance field is taking place. There are regulators, and the banking sector is highly regulated. You can just imagine, visualize this picture. The moment banking sector is squeezed by the regulator, shadow banking system expands. The moment regulator relax banking system, shadow banks shrink. Means what? Banks are highly regulated. Shadow banks are regulated, but not to the extent of commercial banks. Okay. Right. Now we understand there is a sector known as banking sector, and there are institutions which are doing similar jobs, but they are not banks. Who are they? There can be pawning centers, stockbrokers, insurance companies, finance companies. There can be a lot of names coming under that. Commercial banks do similar activities. Okay. What is the only financial instrument that NBFI sector cannot conduct, but only commercial banks can engage in? What is the product? Very good. Current accounts. Only current accounts. Right? The rest NBFIs can do. Okay. Now, these are the financial intermediaries of Sri Lanka. We are talking about Sri Lankan situation. There are financial intermediaries of Sri Lanka which are regulated by central bank. At the same time, remember, there are institutions which are not regulated by central bank. Okay. So if you think about a fishbone chart, there are institutions regulated by central bank. There are institutions which are not regulated by central bank, but still fall into intermediary category. So what are the institutions regulated by central bank? Number one, deposit-taking institutions. Okay, so these are the only deposit-taking institutions which are regulated by CBSL. Licensed commercial banks, licensed specialized banks, licensed finance companies. Then other institutions, EPF, primary dealers, specialized leasing companies. Okay. Now, if you think about banking sector, commercial banks, a figure of 2018, you can see the total assets. Last week, Sunday newspapers, we saw very good advertisement by BOC. Asset base has surpassed a specific number. What is the number? Asset base of BOC has surpassed a specific number, and they were very proud about it, and they put paper advertisements last week, Sunday. What is the number? Can someone tell me? That's how we get updated. Things are changing on day-to-day basis. How do you get updated? Yeah. We are surpassing the number trillion. Okay. What will be the next number we have to surpass? Millions we have surpassed, billions. Right now we are coming to trillions. And very soon we'll hear some nice words, zillions and so on. Okay. Right. So that's on the asset-based sides. You can see two state banks are playing the giant role. Then comes commercial bank, then not a commercial bank, again NSB, then comes the rest of the banks. Right, institutions not regulated by CBSL. So once again, you have deposit-taking institutions like RDB, rural development banks, thrift and credit cooperative companies, contractual savings like ETF, private provident, insurance. Then you have other things, specialized financial institutions, merchant banks, venture capital, unit trust, stock brokering, credit rating. Okay. Right. Now the first part is over. And I'm asking a question again. Can a specialized leasing company accept deposits? You have the slides with you. Check and tell me. Can a specialized leasing company accept deposits? Say yes or no. Can a specialized leasing company accept deposits? Okay. So your chart clearly says something. What is that? Deposit-taking institutions. Only these institutions can accept deposits while being regulated by CBSL. Other institutions means what? They cannot accept deposits. Specialized leasing companies cannot accept deposits. Remember that. Okay, so they are not falling into the deposit-taking institutions. Right. My second question. So remember, this is a very popular question in the past papers, right? Can a specialized leasing company accept deposits? Your answer is no, right? My second question, if a specialized leasing company cannot accept deposits, what are the alternative funding methods available for them? So the question is, what are the funding methods of specialized leasing companies? Okay. So they cannot accept deposits. What are the methods? Issuing shares can be one option. That is not the only option available. That's option, yes. Tell me other options. Okay. Yeah, retained profits, debentures. Okay. Yeah, even if you are a subsidiary of a finance company, the finance company can give you money only at the initial part. That's capital. But beyond that, to your day-to-day requirements, how do you get money? You cannot borrow from general public. That's prohibited. But you have other means. What are they? Okay, so you have promissory notes. Okay, you have commercial papers. You can bank loans and go to banks and ask money. Okay, then what you said all above is there. Right. So this is another popular question coming under the category specialized leasing companies. What are the funding sources? Okay. Now we'll talk a little bit before moving to the other. I talked about a movie, The Founder. That's a very good movie on how you get the maximum out of finance industry, your middleman, financial intermediary. If you do not know how to tackle this middleman, means what? When you don't have financial literacy, you will have a very hard time. Okay. Right. So since this is the very first day, right? Since we have covered the first topic, I'll take time leisurely and tell you about this movie. Can someone tell me who is the founder of McDonald's, the burger manufacturing company? Who is the founder? Apple, you know the founder's name, right? McDonald's, who is the founder? Okay, right, good. My dear, we have to keep on updating ourselves. It's relevant to pass the exam as well as to get knowledge, right? Okay, right. Okay, I got some names here. Right. I'll raise you another question. Who founded or who innovated, who invented sewing machine? Sewing machines. Who innovated sewing machines? Because I see a similarity in these two questions. Who founded McDonald's and who innovated sewing machines? Okay. Now I would say like this. Sir Isaac Singer. Isaac Singer. Isaac Singer is the founder of Singer Sewing Machine Company. Okay. Isaac Singer is the first person to start up a multinational company. Isaac Singer is the first person to come up with higher purchasing facility. I'm asking you this question. Who is the innovator of sewing machine? There was a guy called Elias Harvey. Elias Harvey. He innovated sewing machine, right? So the innovator of sewing machine is Elias Harvey. Even after innovating this sewing machine, it is said he attended to his wife's funeral wearing borrowed clothes. The man who innovated sewing machine was so poor that even to attend his wife's funeral, he has to ask clothes from someone else. Right? One of his innovated sewing machine was purchased by a person in US, and he took this machine to US. Elias Harvey was a British guy. In US, he found a technical problem later on with the machine, and he took this machine to be repaired by a person who was a technician, who was handling an advertising firm, name board, and fixing these totem poles, name boards, I06. He went to I06 and said, I have this machine, can you fix it? There are some areas to be fixed. I06 repaired the machine, and instead of a particular type of needle, he changed the type of needle. He found the machine is working perfectly well, and he manufactured several machines of the same model. And he got the patent right in US for sewing machines. Later on, there was a court case, and Elias Harvey was proved to be the world's first sewing machine manufacturer. But when I asked, your answer was Singer. Very good. That's what has happened. Singer has overshadowed Elias Harvey, and he has become a multinational businessman and became a very rich guy. He came up with very innovative solutions like hire purchasing to make the machine more affordable. But Elias Harvey was a poor guy. So there are enough examples like that. When it comes to McDonald's, it was founded by two brothers. But these two brothers were not rich. They had only one selling place, and two brothers were full-time employed in that one location. A sales rep of milk shaking machines at the age of 50 plus happened to visit this place. He was amazed at the speed, cleanliness, and everything. So in this movie, I recommend you to watch the movie. He listened to every detail of this business. And the two brothers, these McDonald's were open books. So Ray Kroc, the sales rep, could read everything. And he said, why don't we franchise this? And two brothers were not interested. But he started. This old sales rep go to a bank, mortgage his living house, take money, and start franchising the business. He faced a lot of problems, but he somehow managed to franchise, have a lot of sales outlets of McDonald's, and maintaining the same standard. So throughout this movie, you can see the number of issues this franchisor is facing. One day, he goes to the bank, and he shouts to the bank manager saying, if you have anything to do with me, you have to speak to me, not to my wife. Then the bank manager said, I have tried to contact you for more than 3 months. You have not settled your loan. You have not settled your rentals of this mortgage loan. When I cannot contact you, I contacted your wife. And they had argument. And this guy, old salesman, Rayclock, comes out of the bank. He was followed by a person who was carefully listening to this dialogue. He comes up to this guy and said, I'm working in an ice cream company as accountant. Then Rayclock says, okay, I'm not interested. I'm not interested in ice creams. He said, no. I happened to listen to your discussion. I overheard the discussion between the bank manager and you. Mind you, I often visit your burger places, and I'm extremely happy. I had to wait in queues to get your product, but I never thought the owner of this business is in debt, and I can't imagine that. As an accountant, I would, if you allow me to read your accounts books, I can come up with solution. A person of this caliber, this nature business, should not be in debt. Should not be in debt to such extent that you cannot afford to live in your own house. I don't believe that. So the accountant was allowed to look into the books. Then he shows the contract you have signed with these two brothers, McDonald's, allow you only 1.4% of burger business profit. And that's a very small amount. But you cannot overcome this because you have already signed the contract. And the brothers will not allow you to come out of this. Okay. And you are in debt, severe debt. Now my suggestion, the accountant says, your profit or your real business is not 1.4% of $2 burger. Okay. What is your business? Your business is, before that, the bank is not interested in you. Why? Because you don't have assets other than your own house. You have mortgaged that. If you have many other assets, bank is ready to help you. Now bank find you are in such a terrible situation that you cannot even hold to your own living home, your residence. You're in such a desperate situation. Then the accountant asked a very valid question. I have seen many franchised stalls of McDonald's. Are you on rent basis? Then Rayclock says, yes, we are on rent basis. Okay. Instead, you must purchase these slots. Since you have income, you can show that to the bank and get a bank loan and purchase the lots you are living. You do business, your land locations, purchase them. How do you purchase? By mortgaging that to the bank. And you will find you have a whole lot of assets growing. The moment each and every month you pay your monthly rental, your asset is growing. One day you will find your business is not flipping burgers, but owning commercial properties in big cities throughout the world. And he said, okay, fine. Since you have signed the contract with McDonald Brothers, that's on burgers, but you don't have any contract with the brothers on property. We'll start a real estate investment property which belongs to you. And that property will take loans and own the property, construct the building for McDonald's, and rent it out. Means what? Real business guys you. Very soon, the brothers will find their income is extremely less than what yours. Very simple logic. Accountant's financial literacy rate was very high. His suggestion made Rayclock become a man with biggest bargaining power over the two brothers who really innovated McDonald model of business. And very soon, Rayclock made offer to the brothers. Okay, each of you can take 1 million and leave the business, and rest is mine. So they signed a contract. What is that? They can never engage in burger business nor use the term McDonald's. And Raycock took the business. Okay. So this is the difference between financial literacy level and your ability to do business. In this movie, at the end, one brother asked from Raycock, "You are not the innovator. You did nothing, but you became such a big guy in this business and could even purchase us. What is your secret?" Okay, right. I recommend you to watch this movie very carefully and understand the importance of financial literacy, how one simple consultant made a guy who was in debt and could not find a mechanism to even paying his own mortgages, instantly becoming very powerful businessman. Okay, right. Now we can move into the next area. Whether you are in a bank or whether you are in non-bank, you will find you have to evaluate human beings before giving them money. Right? What is the easiest thing? To evaluate assets or to evaluate a human being? What is the easiest thing? To evaluate assets or to evaluate a human being? Just type me. Yeah. Right. When I come to your bank to get a loan against my gold jewelries, what are you evaluating? Me or my gold? Okay. So when you are owning gold, don't you evaluate me? I'm asking pawning. When you are pawning, no, you are not evaluating me. You evaluate only the asset, gold. Is the gold fake or not? Basically, that's what you look at. Okay. Means what? When I come to your bank to get pawning, you can complete the entire process within minutes. But when I come to your bank to obtain a leasing facility, a housing loan, maybe a project loan, you take days or months to evaluate me. Means what? It's extremely difficult to evaluate a human being. Right? Now I'll take you some examples to show how people evaluate one another. Okay. Once I met a very, not the top class, but very powerful, very good middle level business person. Okay. He's an engineer and he has purchased or acquired almost bankrupt company and turned into a profit-making company with his technical know-how within a couple of years, settled all the bank loans, and started to expand the business once again by taking more and more loans. In one of these discussions, he said, I have placed order to import a specific model of vehicle, and due to government tax changes, I had to pay a specific amount, let's say 10 million more to taxes. Then I asked him, you already have a very good vehicle. Why do you want to purchase another vehicle? His answer was very simple. People evaluate my success by the vehicle I use. Okay? So the business people, doctors, they always change vehicles. Why? That's how they are being evaluated. Okay? Think about politicians. They always spend their money or someone else's money, whatever, and want to impress others by the vehicle they use. because they believe that's how they are evaluated. Then think about the small scale businessman. They always cover up their fingers with lot of gold, their necks covered with lot of gold chains. They believe people evaluate them by the number of gold they possess. Okay, so people behave in such a manner that when they understand how they are evaluated, they want to prove I'm there. Okay, some of the loan takers, they believe they are evaluated by crib reports, and they create very good impression in the crib, right? So this is how human beings behave. The moment we understand how I'm evaluated, I want to show you, okay, I pass your test, I qualify your test, I know how I'm evaluated, and I'm ready to get qualified in the same line of thinking. Okay, now I'll tell you a nice example. A customer goes to a finance company, and this particular finance company, those days, they started all of a sudden to give loans because they found vehicle price has escalated and the demand for vehicle is less, and there is LTV, so they moved into loans. And some of the loans, which should be considered almost by banks, were given by this finance company. Single loan value were more than sometimes 30-40 million. They had less knowledge on handling these loans. They have mastered vehicles, but leasing, hire purchasing, but not these project loans. A customer came to one of these branches, met the branch manager, and handed over a file and said, I need 40 million to start up a factory, and I leave this file to you. Okay. And the manager became number one. His impression was, is this guy trying to play with me? Right? Then I asked him, why did you think so? He said, this is the very first time a customer came to me with a complete set of documents at once, even before I asked him. The normal practice is a customer would come to me and said, I need this facility and I need this amount. Then I would hand over him application form. And most of the time, these application forms are not completed at once. Then I would show him, okay, you have to submit this document, that will take some time, street lines, non-vesting certificates, and it will take some time to complete these documents. Then only the file is completed. Then only we look into evaluation. Here comes a complete file. Then I looked at the number of loans he has taken. He has taken 200 million loans within 2 years. And I checked his clip. Not a single area, not a single facilities in arrears. So he has taken 200 million different facilities from different banks, but not a single facilities in arrears. That surprised me again. And I suspected. My thinking was, if a person has taken 200 million loans, very soon he must be creating 200 million assets. The very basic accountancy formula is A equals C plus L. Okay. Assets equals capital plus liability. The more and more you take liability, the more and more your assets should grow. Unless they are taken for consumption. No one needs 200 million consumption loan for 2 years. So his asset base must be growing up. So I became extremely careful. Evaluated the file. Then I found, okay, yes, his accounts were audited by audit firm. And I found a very simple mistake. Balance sheet, SHEET, instead SHEAT, the spelling mistake, very simple one. And I thought, okay, if he has a very good accountant and if they are being audited, this simple mistake should have been avoided, because in several balance sheets, the same SHEAT appears. I suspected. And I checked the audit firm's name and I found there is no such audit firm. Then I took a call to the audit firm's number, the given number, it's not working. And I rejected the file. Okay. In short, when people know how they are evaluated, when people know that you are, okay, when people know that CRIP is so important, people try to play even on credit evaluation. Right. Now we look into credit evaluation. Okay. Can you see the slides? I hope yes. Okay, thank you. Credit evaluation. There are a few models. One very famous model is Campari. Campari means when you evaluate human beings, number one, evaluate his character. Character means if he take a loan, is he ready to settle it? If he say yes, is it yes? If he say no, is it no? That's character. Then your ability. Okay. Margin, purpose, amount, repayment, insurance. So this is one of the health checks for business when approaching a bank for lending. If you have never defaulted a loan, that's what we are looking through CRIP. Your character is good. You understand your ability to honor a credit and you know your limits, and the moment you say, yes, I'll pay, you pay. That's a character. But ability will be different. Before the Southern Expressway was opened, every vehicle moved through Old Gold Road. And somewhere near Alutgama, you will go to Moni's Biscuit. Similar. Okay. Similar locations. Suppose you had a restaurant, some like this, like Moni's Biscuits. Okay. Your character is good. Why? For the longer period, you had a very steady cash flow, and whatever the loans you have taken, you can easily pay back. The moment Southern Expressway was opened, lot of vehicles which used to travel through Old Gold Road changed their route and started using Southern Expressway, and now they don't stop in the same locations. Hello. Good morning. Hi. Okay, extremely sorry. Right. Now, you was good when you had the cash flow coming through your doorsteps in the old road. Now, that traffic is normal. So your ability is questionable. Right? So when you give a loan, you look at past. He was good. He always paid sharp on time. Can he continue to do that? Has anything changed? Has anything changed to influence his ability to pay? Ability. Are you willing to pay? Is your ability is there to pay? Then the margin. There is no point of increasing your business by not having a profit margin. What is the profit margin you are looking at? purpose. I have seen in certain advertisements, they say, we don't ask why. So you come to us, I'm ready to give you a loan, but I'm not going to ask you why. But here, under credit evaluation, purpose is very important. Okay. Do you think purpose is important? Do you think it's important to question about the purpose of taking a loan? Say yes or not. Is it important? Is the purpose of a loan is important? Say yes or no. Okay. Why? Why? When you ask the purpose, then you can evaluate whether this particular purpose will enable him to pay back. Okay. A person, let's say he was 55 years old and he was ready to retire. But his son, by now he has completed his A-levels, want to go to a foreign country to do his degree, the first degree. He tried some good known countries like Australia, Canada, US, failed. But he won. Now this is how young people behave. His ambition is to get a foreign degree. And the real purpose is hidden, that is to get PR in the country that you try to get your education. Okay. So you say something and do something. And he found if you get a European countries, somehow access to a European country, then you can move anywhere in the Europe. So he found, okay, it's very difficult to get into German, France, and he came to know there is a university in Poland. And now father is spending money and son is applying, and he found an agent in Sri Lanka. He showed him a path. That's Poland. They tried, and finally they found, okay, there is not even an embassy in Sri Lanka, so you have to go to India. Now son went to India, spending millions, and stayed almost 1 month in India trying to apply for this, and found they have fallen into a racket and came back. Right? Suppose now father got loans from known parties in millions. Suppose he comes to you and asks, okay, I need 2 million. If you give him loan without asking the purpose, you have lost your money. Right? Now, if you ask what is the purpose, okay, I want to send my son for foreign education. Okay, fine, good. What is the institute? What is the country? Okay, how long? If you ask this kind of questions, then you know, okay, something, you smell a rat. Okay, Poland, why? What next? Okay, how do you get? What is the university? Who are the people who have earlier gone to this university? What is their situation now? Instead of asking anything, if you give him money, you will lose it. So purpose is very important. Amount, that's another important. Okay. There was a time in Sri Lanka during Ranasinghe Premadasa's era, lot of people took loans from state banks to produce movies. And most of these movie makers put up extremely high amount to make a movie. So they somehow managed to do the movie in the smallest possible cost and spend the rest on their own individual requirements like housing and partying, everything. And the film industry failed because they were low-cost movies, no technology, nothing, and people were not interested. A lot of movies were queued up. Amount is important. How much you need? What is the purpose? To make a movie. How much? Okay. How do you repay? If everything fails, what is the security I'm having? Now the insurance term means that. If everything fails, still I must have an asset to rely on. After giving loan, I have failed, fine, but I have asset to sell and settle. So that's the Campari model. There was a very senior banker known as JP Morgan in US. JP Morgan was summoned to courts, and the other side's lawyer said, you bankers give loans to anyone who is already having assets. Then JP Morgan said, no, sir, character matters. That's a very popular statement in banks. Character matters. No, sir, character matters. Okay? So we are not ready to give loans to each and every person who is ready to not to pay. We are not ready to give to the people who are willingly defaulters. So first thing is character. Character matters. Assets or your security, collateral comes at the end. Okay. So then there are some other things like 5 C's. Capacity, character, collateral, capital, conditions. Okay. So these are another important factors to be considered. Right. So why are we looking into that? Because we find it's extremely difficult to evaluate a human being than asset. If you can purely depend on asset like gold pawning, we need not to look at the character. We need not to look at credit evaluation on the individual human being, which we call customer. So customer credit evaluation is not required. But in most of the other cases, asset is just a collateral, just an insurance against if we fail in all the others. Therefore, we look into others. So in Campari, character comes first. And here, character, collateral, capital, capacity, conditions. Under character, social character and a legal character. Okay. Capacity, income statement analysis, interview and observe. Capital, assets, interview. Collateral, that's are they tangible or intangible? Liquidity. Okay. Tangible assets are easy to dispose, but other collaterals, intangible, like you hold a patent right, okay, things like that, difficult to evaluate. Condition, economic survey, release, real estate analysis. So likewise, you can look into conditions. So you have Campari and 5 C's on credit evaluation. Another way of looking at, yeah. So you have integrity, honesty, track record with other creditors. That's with the CRIP, right? That's based on your past. Integrity, honesty. So that's through your interviewing process. Capital, financial strength, wealth, balance sheet, how much of own resources in the project. Is it 50%? Is it 70%? Or is he trying to get a full facility from us? Your capital. Capacity. Okay. Is he having a steady cash flow? Then you can look into ratio analysis and other things. Conditions. The economy, competitor, is the sector good? Collaterals. If everything fails, alternative source of repayment. Right. So these are credit evaluations. Okay. Right. Now, when it comes to banks and finance companies, basically when it comes to banks and non-banks, those who can easily pass the credit evaluation will move into banks. Those who find it's difficult to meet the conditions of banks move into NBFI sector. Okay. So I'm asking you another simple question. NBFI sector charge a higher interest rate when lending than banks. Why? Why does NBFI charge higher rates when lending than commercial banks. So send me your answers. Why does NBFI, say the finance companies, charge higher rates when lending to their customers than commercial banks? You can tell me one simple reason, one simple word. Rest you can, yeah, write in essay type whenever. Okay, because their deposit products rates are higher. Yeah, we'll look into that later. This is the word I am looking at. Risk is high. Risk is high. So whenever risk is high, there's a dictum. What is the dictum? Higher the return, higher the risk. That's another law in banking sector. Higher the return, higher the risk. So when you say depositors are paid a higher rate than commercial banks, means what? You are at a risk. When we say we are charging a higher rate than commercial banks when we are lending, we say we are at a risk than commercial banks. Higher the risk, higher the return. When you say profit, that is the return we get. We get a very high return because they undertake very high risk. So all what you say ends up with risk. Okay. So NBFI sector undertakes a higher risk than commercial banks. Why? Because those who qualify easily from this tough test from banks easily get the facility. And when they fail, they come into NBFI sector. If I ask you, why does informal sector charge such a higher return? We said 10% daily basis. Okay. Why do they charge such a higher risk, higher interest? Informal sector charge a very high interest rate. Why? Yeah, because they undertake even higher risk than finance companies. If I ask microfinance companies, they charge higher interest rate than finance companies. The same thing, because the risk they undertake is high. Higher the risk, higher the return. Okay. But remember, we are very creative. Tell me a product where the risk is less, interest rate is very high. You will find them easily in the banking sector. Risk is low, but we charge very high interest rate over them. Tell me some examples from our own Sri Lankan sector, banking and finance sector. Yeah, the dictum is higher the risk, higher the return, but we all love to get very high return at comparatively lower risk. But in Sri Lanka, yes, we find certain products where the risk is less, but the return is high. We charge a very good interest rate collectively. Okay, okay. I get two good answers. Okay, credit card, my dear, there is a risk. Pawning, there is no risk. Why? The article is with us. Article is with us. So pawning is one very good example. Loan against FDs, yes. Yeah. Think about a vehicle leasing facility, a category of vehicles where interest is high, but this categories users, customers, are very good paymasters. What is this category? It's like pawning. Now, small banks and certain set of finance companies, they are really good in this. Pawning is one very good example. Article is with you and you charge a higher rate. Credit cards, I agree with you, you charge a higher rate, but unfortunately you undertake a risk as well. A higher risk for credit cards. Yeah. Three-wheelers. When it comes to three-wheelers, I'm not referring, yeah, the rate is high. And most of the three-wheelers, they pay. Why? Because they earn. And the three-wheel price has been continuously going up, giving a superb second-hand market return. So very rarely you will cease. But if you have given at very high rates, when the three-wheeler price exaggerated, right? 700 million plus. At this level, if you give a facility, I know you're at a risk. But those days, it was like gold pawning. Three-wheel is say about 150,000 those days, and you charge a very high interest rate. They could easily pay, right? But today, when you say, okay, you purchase a vehicle 5 times more, and the income is less, then that's issue. Okay, now we have completed another important part, and we'll start up something new. Okay. Okay. Right. We are talking about NBFIs. First, we talked about financial intermediation. So what is financial intermediation? Collecting from excess units and passing into deficit units. That's financial intermediation. Then we talked about the structure of financial intermediaries in Sri Lanka. It's like a fishbone chart. You have two sides: institutions regulated by CBSL, institutions which are not regulated by CBSL. Under these two categories, once again, you can divide institutions which accept deposits and institutions which are not accepting deposits. Then we talked about another. Yeah, Kavindra. Huh? No, no. Ah, no, no, no. Okay. Now, then you have licensed finance companies where they cannot accept deposits from general public. Then you must know what are the alternative sources of funding. So you have commercial papers, promissory notes, then uh, loans from other banks, then retained earnings, then IPOs, debentures. Right. Then we talked about credit evaluation. Under credit evaluation, we talked about two sides, Campari and 5Cs. Okay. Now we are moving into another main heading, insurance. Insurance. What is insurance? Insurance is to collect premiums and invest them and pay out in losses and underwriting expenses. Once again, if you recall a recent one, the Pearl Express ship. And now we are looking into what the insurer is going to do. Means what? Insurer is collecting premiums and undertaking the risk, where the insurers select risk to insure and decide how much in premium to be charged for accepting risks. Okay. Right. Once again, I'll ask you a question. Okay. So I used to ask this question whenever I'm having physical classes, and I would say, okay, raise your hands, those who have life insurance policies. So throughout my uh, life as a lecturer, I have found very few. If I take a sample of 50, maybe even less than 5 hands will go up and say, I have a life insurance policy. Okay, right. Suppose you want to obtain a life insurance policy. The insurer will ask you some questions, and based on your answers, your insurance premium will vary. Okay, what are the questions? A life insurer will ask you to evaluate the risk he is undertaking. Your life is the risk he is undertaking, right? To evaluate the risk of your life, he will ask you some questions. Maybe in the application form, you have to tick. Right. To evaluate an individual person's life risk, what are the factors you should take into consideration? Tell me the factors. Okay. Continue. Good. Occupation matters. Health condition. Okay. Continue. Go on. Medical history. Okay. Good. What else? Go on. I need more. Mhm. When it comes to your life, okay, I'm not okay. Right. Okay. Go ahead. Age matters. What else? Okay. Who will? Ah, very good. You have answered to my next question. I wanted to ask who will live longer, male or female? So you have given. Means what gender is important. Okay. Right. Right. I need some more. Very good. So you understand. How about your hobbies and habits? You have covered many things, your age, gender, health condition, right? Family history of health. Good. Think about some other risky habits, hobbies. They also asked, what are they? Yeah. Smoking and drinking habits. Very good. Okay. Now, why do you ask them? Okay. Then, even whether you are engaged in martial arts, racing cars, they're also coming under habits and hobbies. Okay. Now, why do they ask on smoking? Yeah. Because we think smoking kills you, right? So the insurer undertake the risk of that. Okay. Right. Others income earned by investing premiums they collect from insured parties. Okay. So from one side you collect premiums, and the other side you make payments out of the risks. But you will pay out only if there is a risk. If not, there is a considerable amount of money in your hand which you will invest. Then you have types of insurance. Okay. This is a very popular question in past papers. Something very simple. What are the two types of insurance policies? So you have two types of insurance policies. What are they? Life insurance and general insurance. So you call them life and non-life. What I first, okay, then They can ask in different terms. What is long-term insurance? That is life insurance. Okay. Then I'm asking you another question. Health insurance, is it life or general? Health insurance, is it life or general? Yeah, that's general insurance. Good. Now, factors affecting to life insurance, you said that. Age, health condition, health history, weight. Okay, we believe obesity will create or lead to some other problem. So your weight matters. Occupation, certain occupations. If you're a firefighter, right? Then, yeah. So occupation matters. Gender, we believe females live longer than males. Gender related issues are there. So these factors, we are looking into that. Then you must know types of general insurance products. First, just tell me some types of general insurance products. Tell me some types of general insurance products. What is there? Fire and theft, property, marine. What else? Okay, so we'll take one by one. Motor. So that's covers the policyholder in case of financial losses resulting in an accident or other damages. A comprehensive motor insurance policy covers damages to third party and third party property, along with compensating for own losses as well. So motor, as you said first, yes, motor comes the very popular non-life insurance product. Fire. Fire insurance is property insurance that covers damage and losses caused by fire. The purchase of fire insurance in addition to homeowners or property insurance helps to cover the cost of replacement, repair, or reconstruction of property above the limit set by property insurance company. Then homeowners insurance, HOI. Home insurance is a type of property insurance that covers a private residence. It is an insurance policy that combines various personal insurance protections. Okay. Right. So you have that home insurance policy. Travel. Right. So travelers also undertake risks. Sometimes when you go to a particular country, all of a sudden the airport is closed because of maybe smoke or mist or due to spread of a virus, and you are locked in that particular country. So that's a risk. Travelers, when they undertake travelers insurance, they are covered from these unexpected incidents. A typical travel insurance policy will have coverage for travelers' main concerns. What are they? Trip cancellations, medical emergencies, travel delays, lost luggage. Most policies are built to be comprehensive to protect the travelers from a variety of events that may cause a financial loss before or during the trip. Okay, so we are in the media, we have been discussing on this for a longer period. So what is that? Marine insurance covers the loss or damage of ships, cargo, terminals, and any transport by which the property is transferred, acquired, or held between the points of origin and the final destination. Okay. Right, so these are the types of general insurance policies, and we have seen from time to time their importance emerge in our non-discussions these days. When Pearl Express ships issue came, the insurance was discussed and debated. Okay, some of us believe it's instant. The moment damage comes, Very next day, insurer will come and give us money. And they believe this damage is a blessing in disguise. And they believe the insurance companies are fools to just honor all the claims without investigating. Right? Whether your property is covered or not, you have to take steps to prevent risky activities. You cannot act fool and just allow things to happen just because you are covered by insurance policy. Then you have health and surgical. Medical insurance will provide you coverage only for hospitalization. Okay, so that can be varying from different insurance policies, pre-specified ailments, accidents. Okay. Then you have title insurance. When I'm purchasing a property, I undertake the risk. What is the risk? Is the title clear? So I check through the land registry and I find, okay, the title is okay. The person who purchased earlier had a clear title. Before that, clear title. But 20 years ago, the title is not clear. All of a sudden, you come across with this kind of statement. So I get a title insurance. It's a form of indemnity insurance that protects the lenders and home buyers from financial loss sustained from defects in a title to a property. The most common type of title insurance is lender's title insurance, which the borrower purchased to protect the lender. Okay. So that's another type of insurance cover. Personal accident. It's an agreement between the insurance and the person insured where the former will provide financial compensation to the latter or her family in case of permanent disability, death due to an accident. Professional indemnity. Okay. Now, this is something in Sri Lanka we don't go and argue much. Professionals cannot be negligent. Okay? We don't expect a person to die out of doctor's negligence. We don't want to see a building collapse because of a structural engineer's negligence. We don't want to see that. The moment that happened, the professional person who provides the service will be sued in the courts and charged millions. So professional indemnity cover they take. It's a form of liability insurance which helps providing individual and companies from bearing the full cost of defending against a negligence claim made by the client. But here in Sri Lanka, people very rarely go and complain or even go to courts against professional negligence. But in many developed countries, yes, you're professionally liable. We rely upon you. And if you make a negligence, that will create damages. So you are liable for that. On such, the professionals get insurance cover. Fidelity guarantee. Losses sustained by the employer as a result of an act of a forgery, fraud, dishonesty from an employee. The loss can be money or goods for the duration of the policy. The cover may be required in respect of a single employee or a group of employees. Then comes burglary. Burglary insurance is a type of insurance policy that recompenses or loss or damage caused to an insured property and valuable items, etc. In this, a forceful entry by an intruder into the insured premises is defined as a burglary. Right? If someone within the company who is having the lock and key, if he robs, that's not an intruder forcefully entering. So that's not covered by burglary. Then cash in, transit and cash in safe. So we have once again seen in many movies how the cash in transit bank robberies take place. All of a sudden armed people take money from safes at the gunpoint. or cash in transit, the vehicles are being surrounded by armed thugs. You have seen that in movies. So there's anyway a risk whenever you are transferring money from one location to another location. So that is covered. Cash in transit, specifically designed to protect the insured from loss of money arising out of any cause. Okay. The loss or damage to safe, strong room, any case in which money is being carried, the goods or property of the insured for which the insured is legally responsible caused by theft or attempt of theft. Next, goods in transit. Like cash, even goods in transit is at a risk. Goods in transit insurance covers items from theft, loss, or damage while they are being transferred by vehicles from one location to another for the course of the business. Then product liability. So we are looking into the types of general insurance. Right? So under general insurance, there are a lot of types. You must be able to name and describe at least 5. From the very first day, we are preparing for the exam. Okay? So there are 2 purposes of this subject. One is to pass the exam. The other, to get good knowledge about our field, financial intermediation. So for passing the exams, you must be able to name and describe at least 5 types of general insurance products. And I'm giving you many details on each category. Public liability. Okay. Now think about customers coming into your premises and some unexpected thing happen. Maybe the tiles are just cleaned by the cleaning service and they are slippery, and someone, a fast walking customer, falls and meets with an accident. So that's a public liability. Okay. So public liability insurance covers the cost of claims made by members of the public. So they are not employees, members of the public, general public who comes to your premises. It covers cost of personal injuries, loss or damage, property and death. Right? So they come to your premises to do business, but they are not your employees. Such are covered by public liability. First we'll look into that, then we can discuss bankers' indemnity. This insurance provides comprehensive insurance coverage from one single insurance policy to the institutions, which have heavy financial transactions like bank. The risks covered under this insurance are cash, valuables in premises, cash in transit, forgery, alteration, infidel activities of staff, etc. Okay, so these are the types of general insurance products. Okay. Now, at banks and finance companies, we often face cash in transit and cash in safe, public liability, right? This type of risks, and we have to cover them. When we give mortgage loans, we undertake the property. Sometimes the titles are not clear, so we go for title insurance. Professionals, when they give advices, the general public depend on them. If you are a doctor, right? Now, I have seen a social media, a YouTube, someone who has contracted COVID-19 says, I got tested 2 times earlier, but I was tested negative. And I was wondering what. All of a sudden I had these issues, and a particular private hospital, they accepted me. And when they did PCR test, I was positive. And I was happy because at least I found the reason for my complaints. And I wonder if the earlier PCR tests were accurate, I should not have fallen into this severity. Means what? In Sri Lanka, we don't think much on professional negligence. Okay? Then we have seen all of a sudden, A person is taken to do PCR tests and tested positive, and after 2 days said, okay, there was a mistake. You are not positive. Okay. By now, anyway, we are treating the patients differently than 1 year ago. 1 year ago, if a patient is found, we believe just by seeing him, right? In such situation, all of a sudden a person is tested positive, entire village is locked down, and the entire village suffers because of this person. And after 2 days, they say, no, he's not positive. There was error in our process. Okay? And that's taken very lightly. We are not talking about the social damage. We are not talking about the economic losses and things taken simply. But that's a professional negligence that should be covered against the claims of losses. So that's where the professional negligence comes. Then comes public liability. Okay. Once again, let me tell you some examples. Public liability, where is that? Anyway, now general public, they also undertake lots of risks when they just walk under our buildings. In one case, I would say, in a particular institute, a name board was fixed above 14 stories. So the building is 14-story building. A name board was fixed, and that was near the sea. Unknown to everyone, the nails got corroded, and one day the name board fell on a person who was just walking on the pavement. He was killed. Right? So that's a public liability. Failure is from within our premises, and such are covered by public liability. A customer would park a vehicle, and we often see parking at your own responsibility. If something happens, if when they trust our premises are protected, we have to ensure, number one, we always take steps to protect as if we are not secured by insurance cover. Insurance companies are not there just to pay and honor all the claims out of foolish acts. Right? You have to protect as if you are not insured. When it comes to cashier points, we often see robbers, gangs come up at the gunpoint or even with knives, try to rob money from main safe, cashier's points. Okay. So what we do? We have to develop processes. We have to have security guards, sometimes even armed security guards. We have to take all the precautions as if it is not covered by insurance. We cannot purely rely upon insurance. Amidst of all, if it happens, now we can go to the insurance company and make claims. But if we keep everything open, okay, we don't have locks, anyone can come and go, and there are no security guards on such, insurance company will not be ready to honor. Okay. Very soon we will see about a court case or insurance issue on the ship damage, disaster. Then we'll look into how things happen. Okay. But then insurance companies always investigate. I'll tell you one simple example. We have 4 minutes left. There was a stationery supplier, and their main business was print envelopes. That was the master business of them. All of a sudden, they found envelope business is no more lucrative. Why? Tell me a reason. There is an envelope manufacturer. They have been in business for decades, and they were very profitable. All of a sudden, now they find their business is not profitable. Tell me a reason. Yeah. Tell me a reason. Tell me a reason why envelope business is not profitable in today's economy. Yeah, right. Yeah, that's it. Now people are no more demanding. Now who are demanding envelopes? Banks and mobile phone service providers. This particular manufacturer was printing in massive scales. All of a sudden, find SMS alerts, emailing, and everything has changed. Now the demand for physical envelopes is extremely less. What they did, all of a sudden they somehow found their stores is being subject to fire. Fire has sprouted out, and a whole lot of envelopes were burnt down. They went to the insurance company asking millions, but the insurance company is not just honoring. They check from the suppliers, how much envelopes have you ordered within last 6 months? Extremely low. So what is the point of keeping so-called stores? For, right? So the insurance company found that's a bogus claim. There is no reason. If you look at the past, at least 2 years, previous 2 years, what is the stock required? Very less for these banks and telcos. So the insurance rejected the claim. Okay, right. So today we talked about financial intermediation. Then we looked into credit evaluation. Then we started insurance. Right. So next week also we'll meet in the same time. Thank you. You have all the slides. Go through them. I'll ask questions at the beginning next week. With that, I'll end today's session. Thank you.